Good morning. It's the 22nd of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. You all right?
Yeah, not bad. Thanks, you.
That was pretty slick, that one, wasn't it?
Yeah, it was. It was clean. Love that.
Oh, how simple things please simple minds.
Yes, indeed.
If anyone doesn't know, we're talking about the intro, the
Yes.
sort of like the countdown and the sort of like the then the overlay. Then hello, we're here.
Yeah.
Yeah, quite like that.
Very
Anyway,
much so. Okay, let's get stuck into the latest headlines on this Tuesday. We've had a warning overnight from Biden over the use of non-conventional weapons. There was no positive developments surrounding the Ukraine conflict during Monday, with Western assessments that the Russian advances had broadly stalled. The Ukrainian president stated that the meeting with Putin was not realistic at this stage, but did state that he was prepared to discuss a commitment not to join NATO. US president then warned that there was an increased risk that Russia would resort to non-conventional weapons, and also warned over potential cyber attacks on the US. There was more hawkish Fed rhetoric yesterday. Jerome Powell stated that there is an obvious need to do more to neutralize the threat of inflation by raising interest rates to a more restrictive level if needed in order to restore price stability. He also noted that the Fed might well come to that conclusion that it needs to go faster. So everybody on alert for really the next rate hike, which could come at the next meeting in May. We've seen US bond yields continue to surge following Powell's hawkish rhetoric yesterday, with further selling pressure on treasuries, and there was a surge in the bond yields. The 10-year yield increased sharply to near 2.35%, and the highest reading since May 2019. In terms of what's going on in currencies, we saw the yen slide to a fresh 6-year low yesterday as a result of the surge in bond yields. And from the Royal Bank of Australia, they've actually stayed dovish overnight and maintained that stance, with comments that the central bank would not raise interest rates until there is clear evidence or pervasive price pressures. So let's get stuck into some charts then, Steve. What's happening this morning? Anything catching your eye at all?
yeah, not really. Well, indices maybe, but I'll start with oil. We've obviously, this is the sort of like the really in vogue commodity. Gold has sort of like lost its sparkle a little bit. However, oil is front and foremost. Yesterday, another really positive day in crude oil. We saw it move from WTI crude oil move from $103. 13 to up to 110.69, so a $7 range, which is basically the average over the last, well, since the 9th of March. Really, ranges have been picking up. So yeah, that was pretty positive. However, overnight, despite the fact we moved up to 112.79, prices have pulled back quite aggressively as well. So maybe a little bit of a turnaround there. On the 4-hour chart, we can see a typical topping formation on the candlestick charts. This is in the evening doji star. This hanging man candle gave you a little bit of a warning sign that looked a little bit ominous, but obviously this reversal has been pretty aggressive. It's even taken out the 9-day moving average, although we're sitting just above it now. On gold side of things, the 4-hour chart, again, it seems to be really struggling to sort of like get any real momentum to the upside at the moment, gold. So still under a bit of pressure since this head and shoulders has formed. You could say it's probably played out with this low here, but hasn't quite made the measured move target. So maybe a little bit of now stalling, a little bit of triangle formation, and then sort of like we'll judge where we can go from here, but really getting towards the end of that triangle type formation. You really want to be breaking out very soon. Ideally, you break out around about here. So maybe it's happening now. Yeah, for me, a little bit on the back foot with that. If there's obviously the Russia-Ukraine situation, if that escalates, then gold will benefit from that, as in move higher in price. If it doesn't, then we should see this dissipate slightly. On the indices front, it's been a pretty positive continuation higher in the FTSE. We can see on the daily chart, we had these, like last week was like constant, day after day was a positive move higher. We had another new high yesterday, although we closed around about where we opened, so it wasn't quite as positive. But this morning it's kicked on again. We've taken out the resistance that we saw at 74.67, trading nicely above that at the moment, but further resistance. You can see where we've really this should be a whole band of resistance around about these levels. So it'd be a bit tough one for FTSE to get through. On the DAX side of things, similar sort of formation. These candles over the last few days have been quite toppy. They look like hanging man candles. So I'd be a little bit nervous about this. Really, if we can't push much above the 14,560 level and stay above there, close above there on a daily basis, then I think we could be in a little bit of trouble on the DAX. We see on the 4-hour chart this nice inverse head and shoulders formation is projecting higher. That again requires that break of 14,560, and then we'll find resistance at the trend line. But the real measured move target for this inverse head and shoulders formation is a move up to 15,500. But that's a long way off, obviously, at the moment, and there's plenty more can happen in the meantime. On the Dow side of things, again, same sort of price action, very positive over last week. Yesterday tried to push above last week's high and failed. Actually, let's see if it failed. 34,807 yesterday's high, 34,813. Yeah, it did fail. It stalled just in front of last week's high and reversed rather sharply. And we're really listing about at the moment. It really needs to sort of capture ground above that level to target the 78.6% retracement just above 35,000 on the Dow Jones. Nasdaq as well, also hanging man candle on the daily chart, so that is a bit of a concern as well. So we've seen these prices move higher last week. They're starting to stall Monday, really turn around Tuesday. Which way is it going to turn? Potential for maybe a correction lower here. We really will see, I think, in the next few hours where that momentum is going to come from. Really need a strong bit of momentum to make a convincing break higher. Otherwise, it should dissipate. S&P the same, hanging man candle yesterday, and similar sort of formation today. Really not kicking on. Really has to push above 4,484 to 4,490. There's the resistance from there as well. The formation we were looking at here was a head and shoulders formation, and until we really get above the right shoulder, about 4,600, then that's still a potential formation there. Cryptocurrencies, let's have a little look at what our friend the Bitcoin is doing. Still, obviously this is very driven from a sentiment perspective, that the Bitcoin, you obviously have the dollar influence as well. Dollar's pretty strong, so for this to sort of still be around these levels is a positive thing for Bitcoin. For me, I'm looking at more of the short-term, medium-term levels. 46,000 for me on the top side, and on the downside 33,000. So quite a big range. Doesn't really help much on an intraday basis. Again, we're sort of trading within this triangle formation, getting towards maybe the top of this downward trending resistance on this triangle formation. So running out of a bit of steam. That 4-hour candle looks pretty scary, really, if you're long. And we'll see it's an 8 o'clock candle, this one. So this lasts till 12 o'clock. Wherever the mid close is, around about 12 o'clock, if we're below this candle, that would be negative for the short term on Bitcoin. Over to you, Joe.
Nice one, Steve. Thank you. Okay, well, it's pretty much all about the yen in the Forex space. As we mentioned, that there's been some pretty dramatic moves in that of late, with it at 6-year low. First of all, just going to start off with the dollar index just to kind of set the tone. Still trading in a bullish trend. Still finding support at 97.72 and overall still looking quite positive. Yes, we've got a bit of sideways price action at the minute, but overall I still am in favour of higher prices with that. But if we take a look at some of the currencies linked to the Japanese yen, this is the Australian dollar versus the Japanese yen. This was obviously a pretty significant resistance line around 85.80, which began back in May 2021. And it's just absolutely smashed through that level and not looked back at all. So this is 1, 2, 3, 4, 5, 6, 7 up days in a row and showing absolutely no signs of stopping at the moment. So where will it end? Nobody knows, I think, at the moment with regards to that. If we look over to the left-hand side, just to give us some ideas on some potential resistance levels, we've got a previous high up here at 90.30. That was from September 2017. And maybe what we're doing here actually is forming a really huge bottom pattern on that. Well, yeah, worthwhile paying attention to. But yeah, no slowing down at the moment, and that is being mimicked across the board on anything linked to Japanese yen. Let's look at the Swiss franc. You can see there breakout yesterday to new highs above 127.02. Sorry, 2 days ago. A bit stalling yesterday, and back up today, 0.8% higher. If we take a look at euro yen, that isn't quite at the highs yet, but you went back against it, getting there as things stand. 133.15 is the next resistance level to target, and then above that, we've got this blue line here at 134.12, and then we're looking for multi-month, multi-year highs maybe. How far do we have to go back on the left for that? Yeah, back in 2018. Sterling yen, same situation. Breakout only happening today, though, above 158.22. So we need to see that hold on a closing basis on the daily charts. But been trading prior to that in a nice range, and we've seen a breakout higher. So we can maybe look to project the upside on that by measuring the move or the range of the range and projecting that higher. Sorry, it's a bit of a mess there, what I just said. But hopefully you get the idea. Looking for a measurement of that range projected higher, comes in at 167.96. So potential for much more upside on that one following the breakout today on the basis that it continues to hold. New Zealand dollar, Japanese yen. I looked at it yesterday for the gun to the head trade. It was mildly offside at the close. As you can see, we saw this stall yesterday, a doji candle just below this previous resistance, but smashing through that level today and showing no signs of slowing. Up 1.2% as things stand. So that's the leading currency this morning on my watch list. Just go over a couple of others. Euro still suffering against the Aussie following that big move lower. We saw a little bit of a correction higher, but that's moving back lower again. Looks to be five days of selling going on there. Euro Swiss, following that rejection that we posted on the 18th of March, that's selling off as well. One currency that I did quite like the look of this morning was sterling versus Canadian dollar. So from a technical perspective, we have broken to new lows here below this low that we posted on the 8th of December. But interestingly, on the day, we are posting a reversal candle. As it stands, it's a bullish engulfing candle or a bullish outside day on the daily chart. So that may indicate that we are set for a little bit of a corrective move higher. Highly speculative, of course, but if you were to buy it here with a stop below today's low, then there could be some reasonable R on offer, risk reward on that one. Also on the intraday charts, what I was looking at on this, which was a little bit encouraging, was maybe the formation of a wedge, which would suggest it was maybe an ending wedge formation and could result in a corrective move to the upside. So keeping an eye on that today for a potential speculative trade. That's it from me.
Nice one, Joe.
Okay, so gun to the head trades from yesterday. Steve, you keep pulling it out of the bag, mate. You got another win yesterday on gold. He's trading it backwards and forwards, sideways, and all directions, and he's making money every time. So well done, mate.
Yeah, happy with that.
What's the secret?
If you throw enough crap at the wall, some of it sticks, mate.
Yeah, that is a pretty good strategy. Yeah, so that's a hot streak for you. 6.6R in 5 trading sessions. So
yeah, no.
What you got today, mate? Everyone's hanging on your every word now.
Yeah, I know.
Pressure's on.
I do feel more pressured. Again, I'll probably look at the gold. There's a couple of things I'm looking at gold. This triangle formation here, looks like we could potentially be breaking out to the downside, but it's early days. I'd prefer to wait maybe for confirmation with a break below this support here at 1918. I think this is quite key. So this is where everything could go wrong, Joe. Looking at the hourly chart now, and we can see that's my trade I did yesterday. See more clearly what I'm talking about. This is the basically get rid of this one here. Get that. So this is quite clearly supportive here. Now, also, I sort of try to get a little bit of see if I can get any idea from the news sentiment, the market alerts, security market alerts, and yesterday.
Oh, you're cheating now if you're using that. That's the secret, isn't it? You're using news sentiment.
Yeah, well, I know it's all my ingredients have been thrown in to create a secret sauce. So news sentiment has picked up over the last 24 hours, and yesterday posted a 70% confidence in the market moving higher based on the daily news sentiment over the next 9 days. And we can see not only is the news sentiment the line in blue, the 7-day moving average is moving higher. I mean, don't forget, it's still overall it's still negative. So this is what makes it a little bit difficult. But on an intraday basis, we can see news sentiment has moved more positive for gold. And there's the signal posted yesterday at 1922.5. So news sentiment is on my side. If I was to take a look at this and go, actually, this triangle formation, it's going to trade at the bottom of it. Really needs something to change its mind. The stop below 1918, that's my risk. So why don't I just do that? I'll go with the technicals holding and news sentiment looking positive. So and my stop can be really sort of close. So I'm getting in here at 1924. Let's have the stop at I mean, if we give it a bit of room, 1916.29, that's quite tight, but feels like a good one. Yeah, and just don't get too carried away with it. Have the sort of like target around these levels. We'll go for a 3-to-1 risk reward. There we go, Joe. That's me today. I'm buying gold, similar to what I did yesterday, and my stop is pretty tight, 1916.
Okay, good luck. I'm glad you took as long as you did on that idea because I couldn't find anything. So I've managed to pull something out of the air, which is dollar Swiss today. So I was just looking at the daily. Looks to be a big old line of resistance there at 94.72. Didn't quite get there on this move higher, which ended really on the 16th of March, but we saw a nice kind of rejection, shooting star candle. And if I look at how the candle is shaping up today, we've seen already a decent push to the upside, but we've seen a little bit of selling take hold. So overall, still up on the day, and overall, I am still bullish on the US dollar. But in the short term, I think there's maybe some room for a little bit of downside. So looking at the hourly chart, we've got a bit of resistance here. We've got a close below the 10-period moving average that's happened over the last hour. And a nice reference for a stop here as well, this high that we posted at 7 o'clock this morning. So I'm going to sell that at 93.43. With a stop loss of 93.76, targeting a move down to 92.50, which is these lows down here. And that's a risk reward ratio of 2.77. So hopefully I can land something and hang on to Steve's coattails. Okay, nothing really on the calendar today, Steve, for in order to keep us interested. Obviously, there will be stuff going on with what's going on with Ukraine and Russia. Market seems to have absorbed a lot of that information really at the moment. It doesn't seem to be impacting things certainly as much as it was in the initial stages. So, markets do get used to these things, despite the fact that we shouldn't get used to it, because obviously the scenes are pretty horrible. But yeah, not sure what's going to move markets today. Maybe a little bit of a quiet one, but yeah, good luck if you're trading.
Yep, good luck, everyone.
We will be back tomorrow.
Yeah, cheers.
Steve, I've got to do the outro, mate. Don't go
Yeah,
yet.
do the outro. No, I'm going
Yeah.
to stay with you, mate, till you do the outro.
Yeah. All right, guys.
Good luck, everyone.
See you later. Bye bye.